Hey, what's up guys, Radhe here. So today I'm just going to be giving you guys a really simple strategy that anyone can use. It's a really effective strategy. Basically it aligns with market structure. This strategy is dependent on market structure, which is obviously very important in trading. So it's a very simple and easy strategy, and I'm going to be showing you guys what it looks like. So we're going to start over here. As we can see, gold is bullish. Obviously the trend is super bullish. You can see it's making higher highs. So we have a low here, a high here, low here, high here. You know, it's trending up. So we've been trending up since October now, trending up really well. And obviously with the geopolitical tensions that were happening, we're still trending up, and it's broken all-time highs. So I'm just gonna get into it really quickly here. So we're gonna start over here. So as you can see, gold had a high over here. Just gonna take this so it helps you guys understand. So we had a high here, a low here, a high here, and this low, this is not a low because it didn't break this, right? So the low over here. Now this was our last high, which had to be respected. Obviously you can see here it came up and it broke that high slightly, but it broke it. So all that the strategy is that you're going to take the Fibonacci tool, which is a tool that I use and that we use in our group, and you're just gonna wait for price to come below the 50. Why below the 50? Because this is what we call premium and discount. So obviously, why would you want to buy something at a premium price? You'd obviously want to buy it at a discount, right? So we always look to buy. In this case it's a buy, so we look to buy in the discount price, not the premium price. And if it was the other side, let's say if you took this to this over here, sorry for the notifications, just my phone's blowing up, I'm not sure why. But anyways, if you take it from here to here, high to low, it's the same thing. So we wait, in this case it's above the 50 here, and it's the same thing. We're looking to sell at a premium, and the other way we're looking to buy at a discount. So that's like saying buy low, sell high. Obviously it's a famous phrase, everyone knows it. So you always wait above the 50. So how do you know where? Obviously anyone can say, okay, I'm just gonna place a buy limit here at the 50, but you know your stop loss is gonna be so big. So how do we know where to enter? So anytime we place the Fibonacci, the tool, we just look on the left for the clean traffic to disappear. So price, look at this. If you look to the left over here, all these bullish candles, it's clean candles. So price came, it corrected, there's no traffic. Over here we're starting to get a little bit of traffic. You know, you can see this break in retest zone, and it's below the 50. Right over here we're starting to get some traffic. So you could have just put your buy limit here at the 50, and you could have placed your stop loss a little lower and targeted highs, obviously. So the same thing, you're going to do it here. You're going to take your Fibonacci tool from here to here, and you're gonna wait for it to go below the 50. Same thing again, because if you were to buy here, you know, you don't want to get greedy. You always want to, sometimes when it's really bullish it doesn't tend to pull back, but it always comes back to correct itself. So here once again you wait below the 50, and look over here on the left, look at all this traffic. There was a little bit of all this clean traffic. What I mean, there was a little bit of interruption here, but obviously it's above the 50. But look over here, clean bullish candles. So you know it's gonna come get corrected. So over here we're starting to have a little bit of traffic, you know. So it's not clean PA over here, and as you can see right over here where you can see a little bit of consolidation, price came, it tapped, and all you have to do is just put your stop loss, you know, not too tight, let it breathe a bit, and just place your take profit up to the next leg. So same thing again, you're just gonna take, when price is trending really beautifully, it tends to make these highs and lows. So gold is a beautiful pair. Obviously from here you could have taken, where did it break the high? So we're just gonna see over here this high, this was the last high. You can see it kind of broke over here, it kind of peaked up and then it made a low. Can we see, let's see if it tapped to 50. It did go below the 50. So same thing over here, you have a bit of, this is clean candles, so obviously you wouldn't enter here. So you look for enters over here. Look, it tapped to 50 and went all the way up. And I'm going to do just one more example. Same thing over here. Just take the low to high market structure, simple market structure, highs and lows. Below the 50, you can see over here it's clean traffic on the left, so we're not going to buy here. We're going to wait for it to tap the 50, and look on the left, you can see traffic over here, which is also another break and retest, but there's traffic, so there's bound to be some rejection because there's a lot of money over here. There was something happen over here, there was support resistance, and you know that it's there's going to be some amount of money over here, so just place the limit here, stop loss not too tight, and same thing again, you know, you just follow market structure to a T, and follow the trend because the trend is your friend. And look at this, it just keeps going up. When gold is trending, it's a beautiful pair to trade. It's always a beautiful pair to trade, but this is a very simple strategy you can apply. Just wait for the premium and discount with your Fibonacci, and just look for traffic on the left, and it's a really simple and easy strategy to use.